Good morning. This is the pre-market report for 29th March. And now when we're looking at how the market performed yesterday, it performed as per the expectations of what I said in the morning, that as long as we stay above the 200 moving average on the daily chart for Nifty, the box range will stay intact and we should not worry. So basically that's exactly worked, as basically the Nifty dropped to the 200 moving, a bit below the 200 moving average, as it tested our support zone at 17,008 to 17,030, and then it was a clear long there. It formed a double bottom and you could go long till the middle of the box range. Now basically when we look at the Nifty on the 3-hour chart, there is a resistance level which is from the 200 moving average on the 3-hour chart. Now that is going to be you can consider that the top of the box range, and a break above that will give us a short-term up move. In fact, yesterday in the group, in all of them, in all the WhatsApp groups, not the Telegram groups, I had tweeted that for positional option sell trades, I will focus only on Nifty and will take a bullish position, mildly bullish position on the Nifty. This is as I was expecting this week, that at least part of the week will be bullish for the index, as I've been saying from last week Thursday, the American market is forming a good chart, and if we were to follow the global cues, we would also form a good one. So basically yesterday, apart from the option buys which I shared on the screenshot of me exiting and everything on Twitter, also opened option sells once it reached the bottom there. Now coming to today I'm going to watch the mid cap and small cap space very closely, as I have horrible performance the mid cap and small cap space performed yesterday. I am saying that as the indexes basically, like small cap was down 0.8%, mid cap 0.2%, and that is when the headline indexes were severely up. Now how do I see the indexes performing today for day trading perspective? One second, let's remove the session breaks. We don't need them right now. Now basically the Nifty has come above the 50-day moving average on the 30-minute chart. Now the next zone it will have a hurdle. If we just look at simple price action, 17,388, as basically you can see here, a shooting star, another shooting star, and they both have a good volume, especially this one has a good volume. So we will need a stronger volume candle to take out these two shooting stars of the Nifty. Now I had said last week on Monday or Tuesday, whenever this rejection happened, the day before the rejection, that we will, when we are trying to break this change of polarity zone in the Bank Nifty, we are going to face a lot of hurdles, as it's been active since 23rd March or 23rd February. So you cannot expect it to be blown out in 1-2 trading sessions. Now it looks like the index is basically going to make a fresh attempt to go towards it. Only basically we have to first treat if just looking at that simple chart, this gap down resistance 36116 will cause a bit of a hurdle for the index. But when you look at the volume doesn't really support that much of a problem. But yes, so basically 36116 would be a small hurdle. If you want to break that, then we again go towards testing the change of polarity resistance zone. If you open the 15-minute chart, the 200-day moving average is a resistance, so As you're breaking above this, you might have a bit of a pullback and up, a bit of a pullback and up, not a clean move intraday. However, if you look at the 15-minute chart of the Nifty, it's absolutely beautiful. 20 is breaking above the 50-day moving average, and then we go for the 200-day moving average. So we may have a bit of a drop while this happens, and then a rise, because it will be just like a realignment of the whole scenario. Now coming to the quant resistance levels. Now for Nifty, 17,330 to 17,360 is the first quant resistance level, which I have highlighted, and let me open it on the quant charts. Yeah, there is a resistance at 17,300, but that is not going to be that major. The major one you have to focus is 17,330 to 17,360. This can cause a bit of turbulence for the Nifty. So basically, how I would look at it, if a rise to 17,330 to 360 happens, then if there is a bit of a turbulence there, it will come down, and that will allow these crossovers to occur in the 15-minute chart. And then a break of 17,330 to 17,360, we should give a clean move up to 17,465, which is also a major hurdle.
It's 7:45.
In fact, yeah, today usually there is only about 2 out of the 4 resistance which are major hurdles. Today I would say 3 are there for the Nifty. Now on the support front, 17,190 to 17,210 is 17,190. That zone can be considered a major support. 17,210, that is not that major. And then 17,120 is also a major support zone. So basically today, instead of the usual 2 out of 4, there are three major ones in the Nifty. Now when you come to Bank Nifty, 35,980, that is slightly above the 200-day moving average. The 200-day moving average is 35,910, you can say, so 70 points above. So you can say that quant zone is indicating also that there will be turbulence as we try to break this zone. So if let's say break it with a small gap up, do not go long directly in that gap up. See if it settles, or unless that gap up has a very good base, and okay, you don't have the indicator. So, but do not go immediately long into that gap up. And 36,320, and this is going to be this and this are 2 major resistance zones for the Bank Nifty, 36,620 and 36,630 to 36,840. This is that range. Support 35,510 and basically 35,250. 35,250 is a major support zone, and 35,040 is a major support zone. So how to trade today? Do not go immediately long unless you see this terrific bullish trend and short covering happening. Although just let it settle, because it will be rising into severe resistance in simple price action and also in the quant zone, and the moving average crossover has to occur in the 15-minute chart of the indexes. Thank you for watching, and do like and subscribe. Also today evening I'll be releasing a stock video. Thank you.